CPI report has investors at odds over whether the Fed will hike again. Joining us now to discuss is Dominique Dwor-Frecaut. She is senior macro strategist at Macro Hive, and she brings a wealth of experience from the New York Fed, the IMF, and the World Bank. Dominique, it's great to have you with us. And as we continue to digest what we learned about CPI in March, where does this put us on the Fed's fight to get inflation back to 2%?
So thanks very much for having me. And in terms of today's data, unfortunately, not much progress. If you look at a measure of inflation that gets rid of volatility, of the most volatile prices, because we are in a period of extreme price volatility, especially for goods. So this measure is a median price inflation, and it's still above 7%. So what we've had this month is basically a limited slowdown in shelter inflation, offset by a much smaller decline in used car prices. But the net result, we haven't made much progress.
So not much progress made on the inflation fight. But at the same time, I mean, if you look at what the bond market is pricing in after today's numbers, we saw pricing increase for the probability of cuts to come later in the year. How are you looking at that pricing and the realities of what's going on in the economy right now?
So first of all, you know, all these measures of recession probability based on the shape of the yield curve, there are two reasons why I'm taking them with a big pinch of salt. The first reason is a lack of liquidity in the treasury market. I mean, this is a market that from times to time says is up, the Fed has to intervene, lots of inefficiencies, definitely not as much liquidity as, say, 5-10 years ago. The second reason why I don't put much faith in those indicators is that they are based on historical data. And except for the last recession, which is pandemic linked, the previous recession have happened before the Fed started using QE. And I think QE has changed the relationship between bond market pricing and nominal GDP. So in other words, historical data, in my view, doesn't have as much predictive power, or the relationship is not that clear. So I don't put much faith in those.
Well, it gets to the point now where everyone is looking for the signal, and traders have already sort of made their bets. So let's say, Dominique, we head into the next Fed meeting at the start of May here. We get another hike. Most people in the market seem to be thinking that that could be it, and even thinking that at some point this year we could actually see the Fed actually shift course and begin to cut rates. There's still a question here of the inflation fight, of the terminal rate, and whether 5%, assuming that's where we end up here, is going to be enough to say mission accomplished.
100%. And again, I have my doubts. I mean, look at the strength of the labor market. It's amazing. Look at the increase in real wages. Real wages have been increasing for the past year. And if you look at the share of wages in income, it's up for the past 2 quarters, while the share of profits is down, which makes me wonder if firms are not going to try to defend their profit margins by raising prices. I mean, we're just talking about airline complaining about displacement of demand, but airline profits are huge. Mm-hmm. And so, you know, we have this change in OPEC production. We have a cut that's probably going to increase Russian leverage on the overall oil market. So, in my view, more upside risk than downside risk to inflation at this point.
Do you think the Fed will exceed the telegraphed terminal rate that it had laid out at the last meeting? Do you think we could go meaningfully above 5.1%?
Very much so, assuming, of course, no new shock. But on the basis of the available information, especially information showing, as New York Fed President Williams reminded us yesterday, that there is no sign of this crippling credit crunch that the Fed minutes we're talking about just this morning. So yeah, my conviction is that we will go meaningfully higher than the 5.1%.
Dominique, really appreciate your time. That is Dominique Dwor-Frecaut. She is senior macro strategist over at Macro Hive. Still ahead on this program, Morningstar's